So what if women ran Wall Street? Let's ask Sheila Kolhatkar, the author of the article and contributing editor at New York Magazine, and Doug Hirschhorn of DrDoug.com, a Wall Street trading coach. So Sheila, thanks for being with us. My understanding is that your original proposed headline for the story was "Women Good, Men Bad." Do you really believe this whole theory?
I can't say I'm surprised to be getting that question from you. Well, many of the experts I interviewed for this article suggested that women actually could be better at trading over the long term. They tend to be more cautious and they might be less prone to the kind of groupthink that gets people into trouble. But I think the more important point is that diversity is really important. Having different points of view. And this is something that was particularly of interest to me because I worked for many years on Wall Street.
Right, you did?
Yeah. I did, and I spent a lot of time the only woman in the room, and I just thought it was sort of amazing. It shocked me. I didn't expect it.
Isn't the diversity of viewpoints on Wall Street really whether tech is headed up or down, whether the global economy is going to survive or collapse? There's a diversity of viewpoints. That's seller and trader and buyer and short seller. Why male, female?
Well, I think that, again, women bring something a little different to the table. I think if you ask Doug and a lot of other scientists who compare men and women, the way they handle these high-stress decisions, they would say that women are more like the hare. Over the long term, slow and steady will win the race. And
the tortoise.
The tortoise. Yeah.
Sorry, the tortoise.
See, Freudian slip.
Right.
You guys are dying to be tortoises.
Yes.
Let me tell you.
Doug,
You're not kidding.
Doug,
I'm confusing my animals.
You say in your notes, Doug, you say that women are better at managing risk, Doug, but don't you mean that women are better at limiting risk? Doug?
Actually, no. The whole concept came about when from my applied working with traders on Wall Street and inside these firms, what I found out was that men, traders, when they're wrong, they tend to trade for revenge. They take it very personal. They get angry and mad. Whereas women, the traders, when they were wronged or when they lost money in the market, they might have gotten emotional, but the emotion they expressed, and that was a healthy expression of the emotion, they weren't getting angry at the market. They almost kind of reflected and looked back and said, you know what went wrong, what went right, what can I do different next time?
That's a very interesting point, is it not, Sheila? Because, I mean, we've had traders on the show before who have said specifically that they would take on a position to crush the other guy, even if it might not be as profitable.
To trade by revenge, to try and trade to get back
back at the other guy. What do you agree or not? I mean, you were there.
That obviously can happen in the heat of the moment. I think one thing that's important to remember is that women have been proven to be very good for the bottom line for many companies. This has been studied in all different contexts. One study was just done in Europe that suggested companies with more women in decision-making roles had fared better through the financial crisis. So it is really up to sort of Wall Street to decide whether they want to change their culture, embrace perhaps a more moderate approach instead of this boom and bust roller coaster that we're on right now.
But Sheila, if women were running Wall Street, would we have had the biggest bull market of all time from 90 to 2000? Would we have had a 60% run-up in stocks since March of 08 if women were running the world?
I think that's a valid question, and it's possible that the highs might not have been as high. That is certainly what the science would suggest. However,
I rest my case. That's it. I'm sorry, that's all the time we got.
We really have to go because we've got about 10 seconds.